Today, we got a speech from Jerome Powell discussing the economic outlook, inflation, and the labor markets. I want to really quickly take a look at what he said during his closing statements.
So despite some promising developments, we have a long way to go in restoring price stability. Returning to monetary policy, my FOMC colleagues and I are strongly committed to restoring price stability. After our November meeting, we noted that we anticipated that ongoing rate increases will be appropriate in order to attain a policy stance that is sufficiently restrictive to move inflation down to 2% over time. Monetary policy affects the economy and inflation with uncertain lags, and the full effects of our rapid tightening so far are yet to be felt. Thus, it makes sense to moderate the pace of our rate increases as we approach the level of restraint that will be sufficient to bring inflation down. The time for moderating the pace of rate increases may come as soon as the December meeting. Given our progress in tightening policy, the timing of that moderation is far less significant than the questions of how much further we will need to raise rates to control inflation and the length of time it will be necessary to hold policy at a restrictive level. It is likely that restoring price stability will require holding policy at a restrictive level for some time. History cautions strongly against prematurely loosening policy, and I'll close by saying that we will stay the course until the job is done.
I don't want to over-tighten. My colleagues and I do not want to over-tighten because, I think that cutting rates is not something we want to do soon. So that's why we're slowing down and, going to try to find our way to what that right level is. But theoretically, it's another dimension, but it wouldn't be my first choice.
So in summary, he's saying that, they have a long way to go, that they're more focused on how high they're going to have to raise rates rather than actually shifting policy. They're saying that maybe by next month, they're going to reduce the velocity of rate hikes, but they're still on track to continue raising rates. Something else that Jerome mentioned in today's speech was that the effects of the monetary policy have yet to be felt in the markets and the economy. A lot of people just look at the surface level statements like Jerome saying, the Fed is reducing rate hike sizes. Bullish, right? That's kind of just the surface level idea that is sort of the rudimentary interpretation. But the overall effects of all of this, he said, are still yet to be seen. Today, the stock market, the S&P 500, this is the hourly chart. The S&P is flying. We went from 3,900 to over 4,000 here. So, of course, the stock market is taking this as bullish news, though we are coming up on a major resistance here. We can pull up Bitcoin, take a look here. Bitcoin and the S&P side by side. Today, we are getting some bullish action as the anticipation of the reduction in rate hike velocity is coming in. What is going to happen at this resistance here? We'll see. I think it's more likely than not that we probably find some sort of rejection here, though if they do come out next month with a 50-point basis hike, that might be a sign of a soft pivot, which could potentially break us out of this resistance, and then markets could become somewhat bullish for the time being. But one thing's for sure is that they're not going to reverse policy. They're not going to reverse the interest rates, right? It's actually that they're going to continue. This is the federal funds rate, the blue line. They're going to continue to raise rates. It's just going to be at a slightly slower pace. And they're probably being not honest. They're probably not really being honest about how long rates are going to have to remain at high levels. So rates are going to be going higher than they are here. They're going to be sustained at higher levels for longer than people expect, which is going to make it difficult for markets to see growth. But I will say that if we do see some sort of bullish action here for the stock market, some sort of break of this trend, and if you take a look over here at the US dollar index, if you look at the US dollar index, we have broken this parabola. And the last time that this happened was over here in 2015. If you look over here at 2015, something similar took place where the US dollar index was going parabolic, breaks the parabolic trend, basically loses its momentum, and then Bitcoin forms a bottom that takes basically a year to form that low before going ultra bullish again. And so we're kind of in a similar spot where if we're just looking at the macro trend and we kind of forget the short-term noise, whether Bitcoin pumps from here, goes a little bit lower, whatever, it seems like we're in a position where historically the US dollar index loses its momentum, right? Goes from parabolic to a loss of momentum. US dollar index could maybe start going sideways. And if that occurs, Bitcoin may have a shot at forming a long-term bottom before going ultra bullish. And this bottom formation could take, the better part of a year to truly form. And I know a lot of people want to jump the gun and just say, Bitcoin's just going to go straight to the moon. But after a huge pullback like this, after a major bear market with market damage, industry damage, tons of players are going bankrupt here, guys. It's still a question of what is really going to happen here. And what's more likely than anything else is sideways action, right? A little bit of sideways action after we're hitting a new low, right? Somewhere around April of next year, maybe we start to get bullish again. And there's other risks right now in this market. And one of those risks has to do with, when big players go bust, sometimes they have to sell to cover costs. And I saw this clip from Altcoin Daily, one of his recent videos, where he had someone on the show that was discussing this potential risk. Let's listen in to hear what they say.
If GBTC has to liquidate, that will be very bad in the short run. Really bad. And look, it's right in the crosshairs right now. They have $1 billion hole caused by FTX and Genesis, and Barry's trying desperately to raise capital. But if he's forced to actually liquidate the trust to close the discount, that could be ugly, because that puts 600,000 plus Bitcoin on the market, and that'll. I don't even want to say how low we go then.
So, this is just an idea, a potential risk to consider. And it's not just Grayscale, it's all the other companies that have been going bust. If they are forced to liquidate assets to cover costs for bankruptcy, et cetera, that could put a lot of supply onto the market. That could make it hard for markets to see growth. So, even though Jerome Powell is saying maybe 50 basis points in the next month, I still don't necessarily think that we should be, looking for the moon per se. I think we should be looking at something more along the lines of what we saw here in 2015, where the US dollar index breaks that parabola. And essentially Bitcoin is just at least able to go sideways, right? This is the realistic scenario, right? And we want to be realistic. We want to have realistic expectations. And the positive thing about this potential scenario is that if Bitcoin does end up going sideways along, a decrease in momentum for the US dollar index, well, there's a good period of accumulation here before we would actually get bullish again. So it is the time to accumulate as the US dollar index breaks the trend, as the Fed does potentially a soft pivot of 50 basis points, continues to raise rates, but does a soft pivot. Maybe that at least relieves some of the bearish pressure enough to just let Bitcoin do some sideways accumulation rather than going straight down. Because after a market goes straight down, there's usually a recovery period where we kind of go sideways, get accumulated before going up, right? So that is really the scenario that makes most sense to me. And that is my current outlook. And if you look at the BLX, maybe somewhere around April of next year, potentially is when we would start to see things, maybe start trending up. Because right now, again, straight down, a little bit of sideways, accumulate, and then up halfway through 2023. That is my current outlook. Hope you guys enjoyed this video. If you did, smash the like button, subscribe, and I'll see you all in the next one.